So I've had the privilege of interviewing over 2,500 millionaires, average net worth of 2 million or higher. And it's just been fascinating. The narrative today in culture is that you either have wealth or you don't. There's the haves and the have-nots. But the research is actually the opposite. 86% of millionaires are self-made. Almost 9 out of 10 did not come from money. Being wealthy is not having money or not having money. It's the habits and it's the person that you become. You become that person, you take those actions, and then you see the wealth. Like in my life, it happened just over a several year period. I basically 20x my net worth and became a 7-figure entrepreneur. And a lot of it came from these practices and just really developing that wealth-worthiness. So it was just interesting to see that a lot of these people were self-made.
What's up, Bronson? Good to have you on the show.
Hey, Justin, great to see you again, man. I always learn something when I'm around you, and I always appreciate the value you bring, man.
Well, thank you. That's super kind, and I appreciate that. I really enjoyed speaking at your event here. You just recently held an event in Austin, and this last week was quite the marathon for me. It's my busiest week of the year because we put on 2 back-to-back events, both of our retreats for the Lifestyle Investor Mastermind community and for the Tribe of Investors Mastermind community, and it is an intense week. It's an awesome week. And your event happened to fall on day number 7. And so it was 7 days of speaking and I'm excited that my voice has recovered somewhat. It's still a little bit raspier than normal, but I'm through it. I'm through the thick of it. And it was really fun being around your community.
Yeah, it was great. Really great having you, man. Just you added a ton of value, and thanks for coming after a marathon week. And I know it sounds like some of us are glutton for punishment. We just, stack it all up back to back rather than spread it out, So thanks again for being there.
It's just easier. It's easier. Like we could do 2 different events, but I feel like I get into flow. We have everything lined up with these hotels. We have things lined up with sponsors. It's just an easier way to do it. But yeah, I do feel like a glutton for punishment inside and towards the end of the retreats every single year. Yeah. And hey, a shout out to you because not everyone does this. I have spoken at a lot of places over the years. You had a really nice speaker package and gift, and I just wanted to publicly share that it was very thoughtful and very kind and went above and beyond expectation. So I thought you should hear that, and it's kind of fun having everyone hear it.
Yeah, thanks, man. Well, I appreciate you showing up. You brought some of your books. I just want to shout out, everybody knows you and your book, but man, I read this book maybe whenever it came out a couple of years ago, and I just loved, it was some stuff I just never heard of, the invisible deals and some of the things that you talk about and some of the examples. And I said, this is a guy I need to learn more about and spend more time with. So I've been grateful to be your friend for a couple of years here.
Well, thank you. Well, and one of the things I think you're great at is you just, you get out of your comfort zone or maybe it's still inside your comfort zone, but you are, you're persistent about being in front of the people that you want to be in front of. And it reminds me of my journey. And there were tons of people that I wanted to meet with that I could just never get in front of. But because I tried so many times with so many people, I ended up still getting in front of a lot of people. And it was helpful. I had people take me under my wing. I had people, speak at different events that I did that I feel like maybe I had no business being able to get them. And I want to be available and a resource in that same way where I feel like people really did me a solid and I want to help do a solid wherever it makes sense.
Yeah, no, it really is something I think, and I think a lot of passive investors don't realize the value of just really pushing to be in the right rooms. And hence your mastermind and my mastermind. It's just like, it's so important that you're continuing to reach out to people. And I've been floored at times, the people that I've been able to connect with, people like yourself. I had Ken McElroy's become a really good friend. He did the forward of my book.
Ken.
And just like,
we did that panel together.
That's right. Yeah, to put you guys together.
With you guys. And Ken is just a brilliant man. He's been on the show And he's just such a great guy. I hung out with him last time I was in Phoenix.
Yeah, yeah. It's. I'm sure you have friends like this. There's a guy who was kind of reached out to me, and I've been through a network, and this guy's probably worth $500 million in his 80s, and he just wants to give back. So it's amazing how some people that are, and Ken's the same way, and just when you're willing to really serve and ask and reach out. It's just amazing. If you come with value and you come and you say, hey, how can I really add value to what you're doing? It's a totally different approach than somebody saying, hey, I want you to mentor me, or I want this from you. And so sometimes the more successful a person that I find, the more I have to come from a service first approach of, hey, how can I serve this person and what they need and what they're trying to promote? And it just opens up doors, because it's just like everybody's coming to you, Justin, and say, oh, I want this and I need this and give me this. But when someone shows up with just, hey, I want to, how can I help you? And here, what are you working on? And I saw you're doing this, and maybe I can help in this specific way, and they've already thought it through. It's like, that's a huge thing that it's pretty rare that type of thing happens, but it's amazing.
Yeah. You stand out when you do that. When you show up and you offer value versus asking for something, you stand out of the crowd, and that's how you can form some really amazing relationships with people that, maybe from your standpoint, you don't belong in the same room as, but to them, they don't look at it that way. They look at it as like, hey, I have a chance to give back, or I really like this person, or this person's hungry and eager, and I don't have a whole lot of people like that in my life, right?
Yeah.
And so it's cool.
And more successful people you find that they'll always have problems that they're trying to solve. And so if you can come and say, hey, can I help solve this problem? And it's just such a way. I mean, it goes back to, this has kind of been the success, and what's really catapulted my life really is the quote by Jim Rohn that says, make yourself valuable to valuable people, right? So you find somebody you're getting value from, and instead of showing up with an ask, you show up, well, what's the give? What can I give this person to create value? And out of that, it's like, when you create value, you create value for yourself as well. It's almost impossible for you, when you create value for someone, and someone to say, oh, thanks so much, and then walk away. It's like you've created so much goodwill to a very amazing person that you like and respect. So I think it's just a great way to live your life, and in business, it works super well.
I love it. Well, I hope that my friend Zach Post is listening to this podcast. Shout out to Zach. He's listened to every podcast episode I've ever done. I'm good friends with his parents. He's just an incredible guy, and he is looking to level up, and he's been reaching out to a bunch of people on the show to see who will take him under his wing. And I hope that you are listening to this segment, Zach, because this is this is how you get ahead, adding the value and reaching out. And, I just think that is an incredible thing. And so I think Zach just turned either 17 or 18.
Amazing.
And he is hungry and learning, and it's been really cool.
That's incredible.
So one thing I want to talk to you about, you talked about the power of getting in the rooms. You talked about the power of having, the right people, mentors around you. And so for me, I've always said that there are like 4 main areas that to me are the most important areas that I spend money, that I invest in myself, or I invest into people around me. So number 1 is with peer group and getting around like-minded people, but people playing the game of life and business at a higher level. So masterminds and other types of communities. Number 2 is mentors, finding the people that can take you under their wing. And sometimes maybe they'll do it for free because they want to give back. Often you're going to need to pay for their time. You're not even going to show up as relevant until you can put yourself in a position where they recognize the value is you compensating them for their time. The third one is in just education in general. And this could be in books, in podcasts, in conferences, and seminars, in just whatever the educational aspect is, paying to be around people, whether maybe it's not a mentor, maybe it's not a peer group, maybe it's not a mastermind, but just spending money to be on trips or to be in the ecosystem or orbit of certain people. And then number 4 is experiences, epic experiences with loved ones, family, friends, And that to me, those are my four categories that I enjoy spending money the most. And I found that those are the categories that have helped me level up in my own life. And I'd love to hear your thoughts around that, because it sounds like we share a similar interest in that. And you've been able to level up based on mentorship and peer groups and that sort of thing.
Yeah. So just a little bit of my background. I was a well-paid medical sales professional for 10 years, and I, enjoyed what I did. I worked in heart surgery. I enjoyed, it was very intellectually interesting, and I wasn't working that hard. I was working 30, 40 hours a week, but I still didn't have control over my time. And so a lot of people talk about financial freedom, but really I wanted time freedom. And so to me, it would have given me the space if I had time freedom to, write books and to travel and to do things, with family and create those adventures. And another quote from Jim Rohn is, you're the average of the 5 people that you spend the most time with. And so I've found in any area of my life, just as you mentioned, those different areas, ones that are really important to me are faith, health, and then also, family or friends, or getting around certain people, and then just the growth, having growth in my life. And so if I can get around people that are making more money than I'm making, if they're, intellectually curious in a way that I'm not, if I'm traveling in a way they're traveling, they're just getting around people that are doing things at the next level, it's going to rub off on me. Even if I'm, for a while I've been an athlete, I'll run these Spartan races, which are fun, but I hired a coach, which was the number one guy in the world at my age. And it was just great because I learned things that I never would have learned and applied to other areas of life. So sometimes even too, you get a breakthrough in your personal development or in your health, and it leads directly to a business breakthrough. And so that's the amazing thing about success, is when you start experiencing success in one area or growth in one area, it has this dramatic spillover effect that and even to yourself, you're someone now who you show up and you're able not only to survive or do okay, but you actually can thrive and take it to the next level. And sometimes people look at, my life or look at others and say, well, oh my gosh, like how in the world did this person do this? Well, it just came from steady action toward a goal, changing your approach, and keep trying new things, being willing to sometimes fall on your face, and just being willing to get around people that are at the next level.
Well, I love everything you just said there. And one of the other things that I think you've done a great job of is you surround yourself with really smart people. We've talked about it, but you actually surveyed over 2,500 people, all high net worth individuals. And you kind of collected and aggregated a bunch of data from them. And this, I know you're going to talk about this in your book, but I'd love to get a sneak peek. And when I say in your book, your newest book, but, and we can get to, your current book and the book that's about to go out, but share with us some of this research that you were able to kind of glean takeaways from.
Yeah. So, I've had the privilege of interviewing over 2,500 millionaires, average net worth of 2 million or higher. And it's just been fascinating. A lot of it, has been around some of the investments that we do or others do. And but asking questions around, what are some of your goals, or what are the things that have made you successful? What are some of the mindsets that have kind of helped you get there? And one of the things that has really stood out to me is this idea of wealth-worthiness. And I've never really heard anybody talk about it in this way, but it's very similar to kind of the self-talk that we have to ourselves. So again, the example I gave to you earlier, I was sharing, like, let's say I'm at a party, and if I'm single and I see a beautiful woman and I want to go talk to her, but my self-talk or my belief that, am I worthy of a great relationship with a beautiful woman? If it's not good, and if I'm negative, am I saying, oh, she won't like me anyway? And, oh, who am I to be, talking to a beautiful woman? How do you think that conversation is going to go? Right? It's not going to go very well. And so, it's the same with wealth. We don't think it directly carries over, but the things we say to ourselves directly lead to business, lead to wealth. And so, the person who's making $100,000 a year will typically find out a way to make $100,000 a year. If somebody's making $1 million a year, they'll find a way to make $1 million a year. It's kind of this internal thermostat, right? That's set that where we're at now. You can develop it over time, where somebody has one success and you're making more money and you're having success in business and investments, and it kind of gradually grows over time. But for others, and like in my life, it happened just over a several year period. I basically 20x my net worth and became a 7-figure entrepreneur. And a lot of it came from these practices and just really developing that wealth worthiness and just the worthiness in general, mindset. So that's one of the biggest things I think that I found, is just that most people really, it's funny, people that are very wealthy, they look at things like affirmations and whisperings and these kind of things, and a lot of them have practices in those areas, but like 98% of the population thinks that's just like the dumbest thing ever. So it's funny when you find people that are outliers and yet they have these practices that are unconventional, but these things actually do work. And so those are a couple things that I discovered in kind of doing some of that research.
Yeah, I mean, I think there's a lot of truth to the wealth worthiness, I guess, topic or theme here. And, when I think about it, I mean, I know a lot of people that just, they don't believe they're ever going to be more, they're ever going to make more, they're ever going to move up. And so they almost paint their reality right there in the spot. But what I found from like peer groups of people that are playing the game of life and business and health and wealth creation and all this, their mindset is different. And the more I hang out with them, the more I start to think like them. And I remember early on, I remember thinking, wow, these guys think so big. These people, I can't believe their normal talk is so grandiose.
Yeah.
But then after spending time with them, I start thinking that way. I start talking that way.
Yeah.
And I do think it rubs off. I think that, Jim Rohn said it best when he said that you are the average. You're the average of the 5 people that you spend the most time with, and it's so true.
Yeah, it really is. It's peer group cannot be understated. I mean, that's one of the habits we found in the research, that people that were wealthy. You talk about mentors, you talk about affinity groups or masterminds. These are things, paying to be in the room. These are things that people that are wealthy have either all had a mentor, they've had people that are at the next level, maybe. And actually, one thing that was surprising to me that I discovered, and this was through some research as well, is that most people, the narrative today in culture is that you either have wealth or you don't. There's the haves and the have-nots. But the research is actually the opposite. Fidelity Investments did a study in 2019, and they found that 86% of millionaires are self-made. That means almost 9 out of 10.
Up. Yeah, that's actually higher than it used to be.
Yeah.
Which actually tells me that more families are not maintaining their level of wealth. That means generationally, they're losing their wealth through the next generation.
Yeah. And there's two things. Yeah. One is that, the first generation makes some money, the second generation hopefully keeps, the third generation is usually gone or squanders it. But it also says that for someone who did not come from money, and I didn't come from money, both my parents are teachers and just had a pretty humble, single parent, 4 kids in the family, like pretty humble middle class upbringing. But these are things that you can learn. And that's, I think, for someone that doesn't have resources, most people, that's their story. I mean, there are some that come from this big family fortune or trust fund, whatever, but that's really the exception rather than the norm. So if almost 9 out of 10 did not come from money, this means these principles and these habits, and I really think being wealthy is not having money or not having money. It's the habits and it's the person that you become. And then, that usually follows you. You become that person, you take those actions, and then you see the wealth. But again, the narrative in our culture is very different. So it was just interesting to see that a lot of these people were self-made. And I was surprised how many were.
That's incredible. Well, like you, I'm the product of a very middle income family or lower middle income family, product of the public school system.
Yeah.
And so, but I just always wanted more than what I saw. And so I didn't know how to get there. I was convinced I could figure it out because I'm a really good copycat, even when I didn't know anything about anything. I was really good at figuring out what people were doing and just kind of copying what they did, whether it be, sports, in weight training, and whatever it is. And so I just knew if I could get around these people, I could figure it out. I would just do what they did. Yeah. And so I'm curious what other research you were able to kind of put together from this study. Are there any other themes that really kind of shined?
Yeah. So the habits really, because the first thing was really the mindset and how you can develop that. I have in the book, I'm going to talk about some strategies on how to actually develop your wealth worthiness or your worthiness around any area of your life, like how you actually develop that. Because a lot of it, Tony Robbins would say about 80% of success in life is just psychology, just getting the right psychology around something. And then 20%
skill.
Yeah.
80% psychology.
80% psychology. So once you get that in place where you really feel that sense of wealth worthiness, because if you don't get that right, no matter what you do, you're still going to walk into rooms and feel self-defeating. And it says like 93% of people have either self-defeating behaviors that they do, and we all have these things. So once you can start to work on those, it's really powerful. And then so the habits we talked, one is really getting in the right rooms with people, getting people at the next level. That's a rocket fuel for sure. The second one is that these people that are wealthy, they are so hungry to learn. It's been said the average person in the U.S. reads less than 12 books a year, and 50% read 4 books or less. So people are not reading. The average CEO reads 50 to 60 books a year. I know in your book you talk about you read 125 books a year, and I think I read 98 last year. But it's just this idea of being hungry for learning. And so, there's different ways to do it. Books are one way, learning. Of course, now we have YouTube. We have so much information out there. And with ChatGPT, there's so much you can learn, but it's
right.
just this desire to continue to grow and learn. Because like you said, you were talking about, copying other people, and success does leave clues, as Tony Robbins would say, right? That we can just watch what other people are doing. And so by reading, and I don't just read just in finance or in business, I read in, biographies, I read other types of books, because there's so many themes. When I see how Teddy Roosevelt handled this situation, it's like, oh, that applies to me over here, and I can use that. And you almost get to kind of put that in your life in this specific way. So I think that, just the desire for education, the desire for learning, and whether that's about investments, that's about, taxes, it could be around other, just even historical figures. It's a really valuable thing to have hunger for learning. And I think even if it's unrelated to business, if you show up and you've read, culturally you've read different things, it gives you the ability to relate to a lot of more people and makes you a much more interesting person, which gives you more access to different rooms and be interesting when you show up in an amazing room.
Yeah, I couldn't agree. I have some friends that their strategy was, you tear other people down and you make yourself look bigger and smarter and better. And that just never felt good to me. And there was this other strategy where it was, well, what if you just work on yourself and you become, really smart and really knowledgeable and really well read, and you work on some soft skills. So you can communicate well with people, and you can engage, and you can, kind of get an edge with eye contact, and really trying to treat each person that you're communicating with as the only person around, not being distracted by other people walking by. And it's little things like that where I feel like you can elevate. So you don't have to put anyone down, because that's naturally going to attract a lot of people. And more than anything, it makes you stand out. And so I like that thought process. I like what you just shared.
Yeah, I think, just seeing too what people actually do. There's a lot of people that say a lot of things about wealth, that you have to go to Ivy League. I mean, there's all the things that we know, the Robert Kiyosaki, go get a great education, and, Rich Dad, Poor Dad, the things that he kind of said, it's actually very opposite. But again, when you just really are curious and you just have lots of questions, you show up with a humble approach, and you just are, it's kind of that was it Socrates went around, and super smart guy who just walk around and say, I don't know anything. What do you know? And just was asking questions and just being curious. I mean, one of the things I've found that people that are very successful and continue to be, because I don't think success is just monetary. It's really enjoying your life. It's really being able to be someone who continues to grow and learn. Because I think when we stop growing, we stop learning, we actually start dying. And so some of the people I respect the most are in their 70s or 80s, and they are just so curious about everything. And I want to be, either people when they get old, they're either like kind of that crotchety old person that's just like no one wants to be around them, or they're like the nicest people you'd ever meet, right? They're curious, they're happy, they're grateful. And I want to be the latter. I want to be that kind of person. And that's what creates a rich life. And you meet people that have lots of money in that way. You meet people that have no money in there that way. And it's just being, that your spirit has this wealth about you. You show up and you're just a gift everywhere you go.
That's right. Well, I learned a long time ago from many books. One of them, How to Win Friends and Influence People, just to ask more questions than speaking. Let other people speak more than you, and use their name often. Use their first name often. I think that those couple of strategies have served me really well, but it also helps me stay engaged too in these conversations with people.
Yeah, for sure. Yeah.
So tell us a little bit about each of your books. I know you've got one that's not out yet. It should come out really soon, but you have one that is out. So tell us a little bit about each and maybe the difference and what you're excited about with the new book.
Yeah. So from these interviews and for our business, I wrote this book behind me, Fire Yourself, which is replace your working income with passive income in 3 years or less, and it became an Amazon bestseller. It really is designed for, many of these people I spoke with that, I'm a physician and I've got a net worth of 5 million. I've only done stocks. I've got a money person that handles, my finances, that are a financial advisor. And I just kind of go through, why that plan really doesn't work and why I know you're a big fan of alternative assets and why the ultra wealthy use alternative assets. So you don't have to be ultra wealthy to understand it, but it's just getting into the mindset of like, why is this plan not working? I was a registered investment advisor for a few years, which is known as an RIA, and I still call myself an RIA, or a recovering investment advisor. And so, because I just kind of saw behind the curtain, like the Wizard of Oz, right? Once you see something and you're like, things aren't quite really as they seem, there's so much misalignment of interest. So it really just creates a plan for how do you actually, vet deals? How do you evaluate them? What are some of the asset classes that are out there? We did a lot with multifamily investing, real estate to start. We kind of branched out to do other businesses and other types of things. But I think it just gives people a framework for how, okay, when you approach any investment, really, what are your goals? Cash flow, appreciation, or tax benefits. And if you're doing that, if you're trying to solve that problem, one of those problems, what could be some approaches you could use when you look at different types of investing? So that one came out about a year ago. And then Rich Brain is the new book. It is almost fully written. I'm working on it. And then I'm basically going to either decide to self-publish again, or I might try to get a publisher on that. I'm not sure, but I'm very excited for it. I just hope it helps a lot of people that are just saying like, hey, how do I actually level up in my mindset, my thinking, and what are the actual steps that I do to create wealth?
I love it. Well, and to your point here, I just want to throw out some stats because most people don't realize that alternative investments are the name of the game in the circles of the ultra wealthy, high net worth individuals. And so, if you look at the average performance, over the last number of years, in the S&P 500 index, you're going to see generally, if you take the last 30, 50, 100 years, you're going to generally see just under 10% as kind of like the consistent return, 9.5, 9.6%. Alternative investments generally are going to perform 50% greater over that same time frame than public equities in the stock market. And so that's why you have a lot of family offices and a lot of wealthy people that are investing in these alternative investments, anywhere from 45 to 59% of their net worth in alternative investments. This is what the data shows across, JP Morgan private clients and UBS private clients and Goldman Sachs private clients and all these different groups, Morgan Stanley, and then you have these private equity groups like Apollo and KKR that put these out, and then the family office groups that put all this out. And so I love talking about it. But what a lot of people don't realize is in the stock market, you basically only have 4% of money managers that outperform over the last 15 years, actually outperform the S&P 500 index. So that means 96% of the people managing your money, for those of you that are in public equities, don't perform as well as you just putting your money in an index, but they charge you more. And if you look at over the last 30 years, it's actually less than 1%. So you got 4% in the last 15 years, less than 1% in the last 30 years, meaning most people aren't repeating in a 15-year period of time. So the successful ones inside of 15 years, their strategy worked maybe in that economic era, but didn't otherwise. So the cheapest way to have exposure to the stock market is to invest in an index, to do it via, Charles Schwab or one of these platforms that you can use to invest on your own. It's the lowest cost, and it's showing to be the highest performance. And so that is so fundamental, but so many people don't understand it. They don't know the stats. And so I think it's important to share the real numbers with people of what's out there. So this is why ultra wealthy people, and by the way, ultra wealthy only have 15 to 25% of their net worth in the stock market.
Mhm.
And it's not for the return that they're getting on the stock market. Generally, it's so that they can leverage what they have in the stock market to buy more alternative investments,
Mhm.
to get more alternative assets under ownership. And so it's pretty fascinating that the rest of the world does not know this. They don't understand it. They don't recognize that the game the wealthy are playing is different than the way that they are being taught through education, through the universities, through the financial planners and advisors, really the financial services industry,
Yeah.
from Wall Street, from the people that are, spouting off on these different networks on what to buy and what not to buy. And then Wall Street just, it's a behemoth in the financial services space, and they control the narrative. They control everything, even to the point that they call what most of the wealthy people, the majority of the investments of the ultra wealthy, they call that alternative investing. Like it's a small little piece over here, when really it's the majority of the wealthy class.
Yeah, it's really interesting. There was a time, if you were in the 1930s, people would look at you and you said, I'm going to put a bunch of money in stocks. They'd have been like, oh my gosh, why would you do that? Right? Because it was like a lot of people, the stock market went down by 89% over a few years. And I mean, there's a reason why they call them, another way instead of alternative assets, we call them real assets, right? They're actually something you actually physically own, or you have, much more limited ownership or a private deal or something. But it is interesting. And the reason I thought a lot about this too, I know you have as well, but the reason why Wall Street has taken over finance from Main Street is just there's so much money that's been spent, and they're not playing the same game we are. I mean, they'll say the average mutual fund, is 1.2% fees or 1.5%, but Tony Robbins had this book called Money Master the Game, and it said that the actual fees were more like 3.2%, right?
That's
and if
right.
your returns are, that's a substantial amount of your returns that is taking. It's almost like a tax you're taking out, and you're getting worse performance. And so these are things I think people just don't understand. They don't, and I think we just don't talk about money too. That's the thing too that's amazing about these masterminds that you run and I run. It's like we actually get wealthy people together and we talk about how we invest, and we talk about the challenges we've had, or the losses or the difficulties, and it's all very educational, right? And we talk about, I've worked with this group for 10 years. They've been phenomenal, or I don't ever work with these guys. And it's just that sharing of knowledge that, whenever there's money going into stuff like there is in Wall Street, and there's just billions and billions of dollars that goes through advertising for these Wall Street firms. And even after ERISA, which was the Employee Retirement Investment Act, or what it stands for, that back in the 70s and 80s, it basically formalized, okay, we're going to start putting a lot of money from retirements into this. And so, but I would much rather, and I think, the wealthy as well, they would much rather go into alternative real assets, because there's just so much more upside for it. There's so much more control. There's so many more positives we could get into.
Yeah, 100%. I mean, and let's just break it down. I mean, I think that it's important for people to know like the real numbers, because the stock market used to have over 10,000 companies. 25 years ago, it was much more robust and vibrant than it is. Now, it's still a small percentage compared to like, how many private companies there are. So you've got about 400 million small private companies in the world. And 400,000 large private companies in the world. I mean, that's a ton. And you've got about 40,000 only that are listed in the world, and only 4,000 today listed in the US. So you're under 1% of US businesses that are served by these capital markets. And when you think about that, and it's a fraction of it, right? So it's a very small amount. And when you think about what it takes to be publicly listed, it's like 4 years and $40 million. It's hard to get it done. And then when you do get it done, you're now often in a tougher situation, because you spent so much money to get there. It's just hard to beat that spot price of the S&P 500 index. You've got retained earnings, you've got all these different things that you have to worry about. And so I think to limit your investments to less than 1%, like, what is it, like 0.16%, something like that, of the number of companies out there. I mean, that's what most people are doing, where they're fully concentrated in the stock market.
Yeah,
And
there's a lot of things with it too. You have counterparty risk when you start dealing with, instant financialized assets such as stocks, and people, it's funny, the stock market goes down by 30%. Nobody really, oh yeah, it's just kind of what it is, buy more. And there's this kind of these narratives that are out there. And I think being an investment advisor is a lot about just the psychology of managing people with their money. Just, oh, hey, don't sell, maybe buy more. But I also think too, if you look at performance, it's just overwhelmingly like, I don't know if it's 2-to-1, but almost 2-to-1 of like smaller companies tend to really significantly outperform larger companies. And we feel like there's a safety of buying publicly traded or some of these big companies, but it's just, it's just not true. You look at the data, it's like, it's so much more efficient to buy smaller or even private deals. One example we see in real estate is, we do multifamily syndication, and it's like, well, why wouldn't somebody just want to do a REIT? Well, I tell people, a REIT typically is multi-billion dollars, sometimes $50 billion, $100 billion. They're going into very large assets in large markets, and you own that market. So it could be, and if there's underperformance, which of the one of 1,000 different buildings underperformed, or which ones of it, versus having a specific strategy for a specific property. It just gives you much more a sense, even if you're not actually controlling it physically, it gives you more idea of what's actually going right or wrong in that one specific property.
That's right. Yeah. And if you're investing in one of these 4,000 companies, there's a real legitimate chance that most of these companies are struggling to get by. I mean, it's what it takes to be listed, to remain listed, to, all the compliance. I mean, it is hard to be a publicly traded company. So I just think this is great food for thought for people to think about. And it's not that you don't do it at all. There's this community, by the way, of 120 members. They're all 100 million net worth and higher, most of them in the billionaire class. And they literally have less than 5% of the net worth of that combined community in public equities.
Yeah.
And so it's not that you don't do it. It's just that you figure out what asset allocation makes the most sense to you. And you operate by trying to get more exposure in the way that the wealthiest people do. What do they do? How do they grow their wealth? Why are they so much better than everyone else? Because it's done through a manner of diversification, right? It's not this concentrated effort. Everyone thinks it's how does a billionaire become a billionaire? Well, they sold their company for $1 billion. No, that's generally not how it happens. That's a rare situation. Now, there may be an exit involved. Maybe they sold it for, 50 or 100 or 200 million. But most billionaires exist because they figured out how to build that wealth through diversification and through compounding of those assets over time.
Yeah. Right.
So it's important for people to recognize that. Bronson, this has been awesome. Why don't you tell people where they can learn more about you?
Well, I have a gift for your audience. I've got a guide. People talk about inflation and say, oh, inflation's only 2.7%. And I think it's substantially higher than that. And there's an incentive to underreport that. But we have a guide that's how to use inflation to your advantage. And so that's one thing we know of certainly over the next 20, 30 years, going to be substantial inflation. So some strategies using real estate, using debt, using precious metals or borrowing. So that if you text the word inflation to 33777, I'm happy to share that with you. I'm sure I'll share the link with you as well, but love to share that with your audience.
Amazing. Well, thank you so much. Anywhere else we can go to learn more about you? Yeah,
also my website, bronsonequity.com. You can check it out there. I'm on all the social medias as well. Look forward to connecting with anybody that I can help with. I love talking about these topics and about investing.
Wonderful, Bronson. Well, thank you. And I like ending every episode with a question. So the question to our audience, if you're watching, if you're listening, what is one step you can take today to move towards passive income or financial freedom and really living life on your terms? So most people live life by default. So what can you do today to take one step to living a life by design, full of financial independence, financial freedom to the fullest? Thanks for tuning in, and we'll catch you next week.